Good morning, everybody. Happy Monday. Welcome back. Daily Profit Plan. It is the 26th. We're going to wrap up the official first month of the year on Friday the 30th. We have a lot of news this week to sort through, to get through, to trade through. Um, Big earnings this week. I should have the screenshot here. So notable earnings this week. I sent a video out on Friday in Telegram, Twitter, YouTube. I think I posted it inside Telegram. Um, so most of it is going to coincide. So beginning or the end of the month, we have the kind of the meat of the earnings season kicking off here with Mag 7 getting underway now that we had a lot of financials issuing, which financials were okay. I actually expected them to be a little bit more robust. I think a lot of them did beat earnings except for JP Morgan. That was a big one. Yep, I'll get the screenshot up in just a second. Sorry. There we go. Thanks. Okay, screen's up. Chat is everyone. Perfect. Perfect. All right, chat's over, everybody. Okay, so here is the summary, some of the notables of earnings this week. Most of the big ones are Wednesday and Thursday, not to take anything away from the other companies that are reporting, through the week. But when we have FOMC on Wednesday afternoon at 2 p.m., after market, we have three big ones: Microsoft, Meta, and Tesla. Thursday, Caterpillar and MasterCard. Apple is a big one. Amazon got pushed out to February. We also have some big energy on Friday with Chevron and ExxonMobil. So anyway, market cap wise, there's a lot up for grabs this week. Forward guidance, I think, is going to be the most important thing. Are these all priced to perfection? Not necessarily. Microsoft had a decent pullback since last October, November. Meta, same thing. Tesla's bounced back and forth. Did poke all-time highs around $500, and now it's pulled back. Chevron, ExxonMobil, two companies I'm looking to stay long this year. I think if you caught it over the weekend or you're seeing pre-market right now, I think this is really. I don't really know what to make this outside of this is mania. It could get a lot crazier. I'm making that pretty bold prediction that we're going to see some type of pivot on gold here in the next maybe 30 to 60 days as we creep up towards 600 plus bars. Gold is up, a couple percent this morning. Silver ripping up, 5-6%, well over the $100 handle. What's kind of interesting, this is market cap, and gold and silver by far and away now, like massive market caps. Even silver has eclipsed Nvidia. So it's we have to take this stuff really seriously. I really don't know if this is the market's way of saying, hey, this is losing trust in the US dollar. This is some type of bear play on the fiat system. Maybe. It's a maybe. I think gold is still a great trade. I think gold is still a great investment. Do I want to be, all in and heavy on gold and or silver? No. It's never been that trade ever. I get that right now, if you're timing it well and you're running with it and you've got a trade on and it's doing, that's great. But it's never the type of trade where you're all in, because believe me, there will be pullbacks. Anyway, it is crazy, but it's crazy exciting. If you have some participation, you're feeling pretty good about yourself. If you're looking to have some participation, I'm this way too. I'm still looking at better levels to participate in GLD, which again is going to have a big jump today. This is the same reading over the 200-day moving average. I still think once we hit, and it could be, let's say 5,000 an ounce, which is we're at 50.67. Is 5,000 a big round number that the market's going to respect? Well, it's blown through it right now. But the further and further we stretch away, and this is kind of what I warned, so we had this recent wick high. It's almost 25% overextended. Okay. I'm saying that right now is not the time that I want to be bullish. It's just not. We've had 1, 2, 3, 4, 5, 6 candles up. I get that the candle could get even crazier and wilder to the upside, but there will be a shakeout at the top and most likely coming soon. So I'm still just hopeful that the technicals will prevail and that we get some opportunities to buy in. This is my end of March forecast that I think the market makes an attempt to show signs of either a topping pattern or is actually all the way down to this 200-day moving average. And you throw something else on top of this, we could have a government shutdown at the end of the month. So probably still looks good for gold and silver. But anyway, all good. Let's see what's going on here. Yeah, how's that weather situation for a lot of people in the middle of the country or to the, I guess, like anywhere from Iowa to the east? We got traders in Illinois, traders in Michigan, traders in New York. I talked to my brother and his fam last night. They're in central Indiana. They've had activities in school canceled like multiple times last week, negative 20 degrees with snow, 17 and getting colder in Alabama. Wow, that's bad. Texas trapped home, 7 8 inches of snow in Indiana, road crews cleared. Jeez, that's so bad. Yeah, I mean, a lot of those places in the country just aren't prepped for massive snowstorms like that. I mean, for Michigan, we had plenty of lake effect snow when I was on the west side of the state, so that was par for the course. We rarely had school canceled, which was annoying. As a high schooler, you're like, I want school canceled every day. Let's see here. Iced in here in North Carolina, 8 inches in east central Illinois. Pretty sunny in Israel. Yeah, that's good. I mean, it's not snowy in Utah other than the mountains, which is kind of crazy. Time for a vacay down. It's probably not a bad thing. Austin, Texas, iced in. Yeah, that's wild. Long Island, 9 inches here. Sister, New Jersey, got about 2 feet of snow. Wow. Banned from using the roads until tomorrow. Allen, Indianapolis, we have a bunch of snow. Lake Michigan has dumb snow here in Indiana, as always. Says dumb snow. Yep. Crazy. Yeah. Well, hopefully, no power outages. Hopefully the plows and salts will do their job and everyone's back to business as usual this week. Yeah, a lot of cold. I mean, Florida's getting cold temperatures. Atlanta 22, 12 overnight. Cold in St. Pete. Yeah, there's a lot of frost delays out there for the typical states that don't have snow. So anyway, let's get after a little market prep. So we have FOMC this week on Tuesday. We have PPI on Friday. We have all the earnings on Wednesday. We have the end of the month. We could have a potential government shutdown by the end of the month. Again, I think that's noise. One thing I wanted to discuss this morning, I do have to get some trades in. I posted levels for engineered options, so we put this week's levels in. I'm sticking with XSP for right now for engineered options. The VIX has been up a little bit this morning. I'm going to go to this 17.4 high. We're going to use that this morning for daily profit play. So let me set a chart alarm around 17.4, see if the VIX is going to go up a little bit. We're sitting on futures is a little bit positive this morning, about 0.1%. We should have an engineered option trade coming to full expiration today, which is solid, of course, and then out to the 30th as long as prices stay. Let me look at Friday. Friday, there's obviously a lot of volatility due. These levels are kind of in the way, but we still have about a 70% chance of profit for the end of the month. And then a working order. So we'll see how that plays out. This is in. So if prices obviously sideways or up for the week, then we'll end on Friday with a winner. We'll have three winners all at 100% each on engineered options. This week, because of the news, because of the noise, I'm not going to get super aggressive to the upside, but I'm looking to play the break-even level for engineered options. And then I did want to actually talk about so how many of you are in the bonus trades with me? The bonus trades that I posted that are broken wing butterflies, like the 69.30 handle. Okay. I think for Friday, I'd like to look at a potential hedge trade. And again, we pulled in $1.65 credit, $1.95 credit. So I basically need to cover something that gives me a risk reward that's greater. And I'm not looking to obviously, hedge the entire position, but I'm looking for the profit opportunity to at least cover my risk. So for the bonus trades, I want to look at those strike prices. I know that one has a break even around 69.50 and the other one has a break even around 60. Let me find the trades here. That's pending. That one's fine. The trades that are actually in, that are live. Let me find it up here. I've got to go back a little. Okay. So this is the trade that we filled on. So I did build a trade on Wednesday at $1.65. And then we added the trade on Thursday. If you like this one, this is a 45, 55, and 70. That break even is going to be around 60. I'm trying to think. So we have a $10 profit trap that puts me up to 65. So 67, roughly 69, 67 is my break even on this trade. But I'd like the trade to stay between about 69.45 and 69.65 to offer some type of bonus trap, right? Somewhere in there by, and again, the easy trade is just stay below 69.45 and we win on the $1.65 and we win on the $1.95 setup. Okay. So what I'm thinking is if price is going to start to work its way up to all-time highs this week, even if it's not holding there, having to trade from like maybe a 69.75, 7,000 area. I want to see what a butterfly spread looks like this morning. So look at like a 69.75, 7,000, and 70.25, or I can play around with maybe a 20 wide or something. But hopefully, if I can get a trade in for like less than $1, and maybe it offers us up maybe $1,500 a profit, $2,000 a profit, and we could do some pretty good coverage if our trade is threatened back to the like right here. I mean, if we are in a rising wedge, could I see the market finishing the month positive and closing up here and then retreating hard in February? Yes. Could I see this week being nothing but indecisive? Yes. Could I see this week, retreating after we break, retest, and then we start to head lower? Yes. Right. So, I mean, 3 price action scenarios that I could all see playing out. So I'm not going to be surprised if price goes a little bit higher because we're already there. I mean, 69.22 is where we closed, or we're trading this live right now. 69.22 would be another, 10, 15 points higher. So this trade is running. Okay. But I think I need to have some protection up towards these highs if possible. So the goal is, don't spend a lot, but hopefully have protection that covers our risk and more. The 676, 675 was never filled. If it doesn't fill, Jacqueline, it can just roll off. Like the broker can cancel it for you. The likelihood of that getting touched today and filled today is very slim. So anything that is sitting and pending for a 126 expiration for engineered options, just let it expire or cancel. No worries on that one. Jennifer, you're right. XSP will require more fees, but you're putting in how much more risk on SPX. So I'm going to stick to XSP for risk purposes. Like I don't care about an extra couple of dollars in fees. I care about my total risk, and my minimum risk would be $250 if I want to do multiple contracts. 250, then 500, then 750 to 1,000. It's like that's a big step up in risk for a week that could be very volatile. So I'm not worried about the 60-cent commission fees on XSP when more importantly is I want to manage risk this week. If you want the levels, then I can calculate out the levels. I'll send a video update out after the session. So I have our live session this morning for daily profit plan. We've got waterfall income at 11:30. I'll get a engineered options video out. Again, those trades can kind of sit for the entire week, but I'm going to focus on the XSP just for risk management because it could be a wild week. Okay. All right. Good. All right. FOMC's on Wednesday there, Larry. Yep. Wednesday at 2 p.m. Okay. And I'm trying to think what else. I do have a little daily profit play to read through this morning. Daily profit play has been, one of my bread and butters. We had some full winners last week, which were nice. Ended up grabbing a couple of bucks, which I was happy with that. We had one that was really nice. It was a pin trade that made us like $300 last week. So overall, I think I had three trades for the week, about $1,270 last week in daily profit play. Not too shabby. Those are always fun. Waterfall income. Have a fresh trade session. Hopefully, another trade at 11:30 today. We'll see, Larissa. I wanted to make sure that I know exactly where prices are opening today. So I might modify a participation trade. We do have decent alignments. So here's Engineered options. Where'd my workspace go? Here we go. Get out of here. Shoot. So alignment wise, I mean, we are stacked pretty decently. I mean, the 1 hour chart had a nice recovery and we're indecisive. I don't love the 1 hour chart, but obviously I'm not making all my decisions based on a 1 hour time frame. The 4 hour chart still looks solid, bounced off the 144 in the 4 hour. We've seen this hold as a buy zone for, quite some time now, the last, 7, 8 months. Same type of thing. Daily chart still looking pretty good. Again, would anyone be super surprised and shocked to see the market hit all-time highs? Not necessarily, but if this structure, like I said, is a rising wedge and all this market did was break, retest, if we don't have enough oomph to get us over the 7,000 handle this week, then either more indecision or a softer result, right? Because if we come back below the 50-day moving average on the daily time frame, once we're below the 50, this is not the time to be a hero. Once we're below the 50, 144 is right there. We want to be waiting for that area to give us a bounce. Okay, so alignments are decent. They're decent. I'd say the 1 hour is a little bit. It's still stacked up. 50 is above the 144, but we're not necessarily trending higher. It's like we had a big kind of a stall and halt in that trend last week with the market up, down. We're flat right now, and we're going to see kind of where this all shakes out. Realistically, I think this could be a very indecisive week with all the news and noise. FOMC, government shutdown looming. Sometimes the market likes to get ahead of stuff like that. Even though it's short-lived, and we saw the government shutdown last year, longest in history, didn't stop the market from moving a little bit higher. Okay, gamma levels for the day. Yep. Again, you can see it's quite wide. So we have the pivot point 69.25. As long as we're above 25, 69.25, that's positive gamma. So that should mean more drift to the upside. The one thing I don't love about today's gamma is we have a big level, 50, 68.50, and 68.40. And we have a big level up here at 7,000. So if we're kind of opening up positive today, we better cling to that. If we stay positive, there's just too much of a transition space, right? So would I expect a lot of movement today? I mean, it's Monday and it's a week of FOMC. I would hope the market's not capable of giving us a lot of direction today. I'm hoping that today and tomorrow the markets are actually pretty calm, anticipating, of course, that there's going to be a lot of volatility to open up on Wednesday, Thursday, and Friday. So we've experienced it a lot with FOMC weeks. Is it's typically pretty straightforward. Monday, Tuesday, and then Wednesday is. It's a difficult day for daily profit because you can take the trade in the morning, you can watch price do absolutely nothing for hours, and it's all about the afternoon volatility at 2 p.m. when the FOMC comes in. So Wednesday is not a day that I usually love trading trade daily profit because it's just going to be a stuck trade. You kind of set up set up your trade. It's the reward to risk that's slightly higher risk because it's daily profit play, so we're selling premium, but it sits all morning. And then you kind of have to roll the dice to see is it going to stay inside this range for today? We're going to get some crazy volatility today, this afternoon with FOMC. And it's never a fun trade for the day. So we've learned enough that it's not really worth the potential risk of a Wednesday, especially when the trade that we do according to plan is usually out within 60 to 90 minutes. So I don't like to sit on the trade for 5 hours when we should be out of the trade already. Anyway, but Monday, Tuesday should be pretty solid. Let's see here. XSP trades Telegram for 2-2 are still valid. Yeah, they're still valid. So those trades are in my broker platform right now. It went out this morning. Yep. So it was sent out this morning. Engineered options posted at 9:03. So we have our running trade that should be expiring for profit today. There's about a 90% chance that it does. That's good. We have trades out to the end of the week that are looking good for profit as well, as long as we stay above 686. And then the levels for XSP, I'm specifying the contracts. I will post a video if you want SPX levels. I'm happy to give those. I'm not trading SPX this week. I'm going to keep the risk a little bit tighter. I want this market to kind of get this shakeout over with. I could see I could see a correction. I mean, between government shutdown, maybe some I mean, I don't know if Mag 7 is going to have just super optimistic forward guidance or if they're going to have a little bit of hesitancy. And if they do, I feel like, we are at a market with our current valuations where things are priced to be darn near perfect. And if they're not going to maintain perfection and maintain just crazy amounts of optimism, I could see a 25 times earnings in the S&P or 35 times earnings in Mag 7 stocks. I could see those compressing a little bit, and that will drag stocks lower. Okay, so just something to be aware of. That's all. All right, highs and lows for today. So for you talking daily profit play. So right now we're looking at a VIX around. Let me open up that VIX workspace. 17.41 was my VIX this morning. So it's trading at 16.5. I had a recent intraday high around 17. I had that chart alarm go off last night, actually. So 17.4 is the kind of intraday high of the VIX. That was around 4:45 this morning, but it's retreated. Now, again, for a Monday, it's like, are we going to see the VIX rally up all day? Are we going to see it retreat down into 15.5? I still kind of want to use this safety level of if we don't break 1740, somewhere between just over a 1% move. So 1.03, that's a 17.4. So 1.03. And if we did a 17.4 VIX, 1.09. Obviously, that's a big difference of how you place a high and low for the day. So I will recenter this thing at 15. So we closed last week. That shifts my daily profit indicator. This is the yellow VIX box in the background. Let me see what this measure move is. So center here, you're looking right around 1% on the VIX. I'm going to go just a tiny bit higher than that. Let's see what a 1.0. I mean, to be safe, let's look at a 109. We'll see how fast things move this morning. So 109 puts us around 69.90. That's a 17.4 VIX. If we go from the low, and again, we're going to have a slight gap higher, so I'd actually make an adjustment here. We'd have a slight move futures creeping up there, 0.14. S&P is up 0.3%. So we're gonna see some upward drag on the S&P this morning from the looks of it. 109 around 68.40, 68.39 with a 17.4 VIX. Okay, so that's where we're at. It would be nice to see that there's little to no direction for a Monday. I'm hoping with FOMC and earnings on Wednesday that the market's not really going to be primed to make a move ahead of time. I still want to get a trade in for defense on my bonus trades because those bonus trades I need price to stay below 69, basically 69.45 is for full profit. I have $1.65, $1.95 running on those. So I want to have something that offers me some decent reward to risk if we're up into the 7,000 handle. So look at that bonus trade this morning. Don, that's correct. Yep. So, and those ones that didn't fill, no big deal. I mean, they're there for our defense levels, right? So if we have a trade in that fills and is profitable, that's the one I'm taking. That's the one that's 100% return. We again, if you're new to engineered options, we've had 4 master classes. We'll probably sprinkle in another one this week. I'm going to try to get one in by trying to think. Tomorrow should be a little bit easier than today to get into master class. Today's kind of slammed with a bunch of stuff. So if I've got any new engineered option students, we'll get a master class in, another one, and again, it doesn't have to be hours and hours. It's like we just spend some time together, make sure we can answer some questions, get everyone off on the right foot, especially if you're new. But yeah, if the trades are filled, obviously they're active. The ones that are pending, if they expire today, the broker just gets rid of them. So if they don't fill, Okay. All right. So it is officially opening bell. And let's go SPX. Looking for daily profit play today. Okay. So we're up a little bit on the morning. Keep an eye on this here. All right. So positive, negative gamma. The one thing I don't love about today is look at how open price is here. So, again, pretty vulnerable. If we're going to have direction, it's like, could price fall from, I mean, it could. We don't see a lot of these gamma levels go unhit for the entire day, but I mean, truly, I hope that's not the case. That's way too much volatility when the market's expecting maybe 30 points today. I've got a plus minus 24 on the day. I mean, if we drop to 68.40, that's an 80-point drop. I mean, that's a three to four times move. That's way too high. But for engineered options, I'm going to stick to XSP, David. Yep, stick to XSP. All right, so let's have a look. The first thing I want to get into is maybe a defense trade, which I'll go out to the 30th. Let me see what a 20 wide butterfly looks like. So $1.70, which I don't really want to sacrifice that entire trade. That's a lot cheaper. So I'm up $1.65 or $1.95 if I'm right. This one at least offers some profit to cover that risk. If we tap 7,000 by Thursday or Friday, this trade's worth up to $1,400 or more. See what I can get this debit for. That doesn't overlap with a broken wing. Okay, so that'd be 15 wide. 10 wide is even cheaper, but obviously I'm not trying to shortchange myself either. So I think I'm going to do this trade and go 15 wide. See if I can get this trade for 90 cents. Under $1 is fine. And I'll explain what the logic is here. So I'm going to go bonus trades. 90 is not filling. 95. Hopefully that keeps it under $1. That'd be great. You dirty dog. All right, just got filled at 95. So quick update here for this is in my public Telegram. Bonus trades. I have 2 bonus trades for 130 expiration with broken wing butterflies. Ideally, SPX stays less than 6945 and 6955 by end of week for full credit winners of $1.65 and $1.95. Just in case SPX decides, or just in case SPX may push higher to poke all-time highs around 7,000 handle. Going to add a defense trade for 95 cents debit. So 130 expiration. I'm buying the 6985 call. 7,000 call, and then the 7015 call. That was a 95-cent debit. Max risk. And 1405 is max profit. Potential at 7,000 by expiration. If this trade shows, let's say, $400 to $500 of profit, I'll look to protect it and cover the full risk of the bonus trades. If this trade loses, no biggie. The broken wing butterflies are profitable, and the end result is net profit. Okay. So I'm adding this bonus trade. Yes, I'm sacrificing 95 cents of my profit. So if I have the $1.65, okay, and I win on that trade, but I'm wrong for the $95 hedge, I'm still making 70 bucks on the trade. If I have the 195 broken wing butterfly and I still sacrifice the 95 here, I'm still up $100 on that trade. Okay. But with the profit potential on that 69.85, 7,000, 70.15, this one could pay up to $1,400. So that's more than enough to cover some of that risk. That makes sense? Okay. Getting some direction this morning. Did anybody catch a plus minus before the market opened? I'm getting like a 24 right now. Yeah, Ernesto says daily range at 29. Okay, good. So we opened up at 23, gamma at 25. Let's check live. Check some live gamma. Larry, 38 pre-market. Okay, wow. Good to know. So we're making a run. 55. It's getting there kind of fast. I mean, we shouldn't see prices going much higher than 69.70 today. Let's measure that 38 from 20. What would we open at here? I'm showing an open around 69.23. So 69.60. So, I mean, based on the expected move, 69.60 should be about the top of the day. My gamma has us up to about 60 to 70 zone, which again is difficult to get to. If we hit the 50% ATR, that tends to be a natural resistance level, just based on expected moves. If we hit the plus minus top, I'd say we don't necessarily go too much higher than 70 today. Okay. Which also means for my break even for the week, look at this price on XSP. So we opened up around 90. What's the close here? This close is 91. We opened up at 92.30. That's 91.50. If I did a 692 by 691, that literally would be a break even of a break even. So I think I've got the levels right in XSP for engineered options. I'm doing a 691 as my starting level. So I'm basically starting at a break even point for the week. For now, just because I expect a lot more volatility than just the market's up all week. I think, trust me when I say we're probably going to have some noise this week. Okay. All right. So there is our gamma live. Let me see with the initial direction. So we're in 0 DTE right now. 25 is a pretty big level, trading at 43. I mean, if the market makes a move into 7,000, that'd be pretty darn impressive for a 0 day. I mean, it does show that we do have some gamma levels there. So between 69.25 and 7,000. I mean, if we're staying above 45, that is a sign. Let me do one thing here. I mean, I don't want to be kind of bullied out of the trade by this wide open gamma. Like this is what I don't love. It's wide open above 50. So, this being a transition though, this is just kind of, drift area. So if we don't have a lot of resistance here around 50, we could certainly move a little bit higher and just positive flows, it's a lot to ask for a Monday. I wouldn't expect price to get up that high, but let me see what it looks like for today. I mean, it's you're trading a two delta for crying out loud for that 7,000 handle. 75 by 80. I'll try this one here. See what this looks like right now. Broken Wings give me 0 credit, 5 cents credit, which I'm not interested in. Okay, if I go 10 delta and 85, 60 cents. $85. Yuck. Okay, let's see. I might try this. Might try 10 wide. Gosh, it's so bad. So I'm going really low delta on the call side, just in case. Put side, I'll keep it single digits. It's only offering 50 cents. Try to give me a buck. I think that's a pretty decent setup. What's my 68.74? That'd be 68. Okay. Just talking out loud here. I'm going to go dollar credit. All right. So daily prop play coming in with a pending order. I'm playing it pretty conservative today. Okay, I'll keep an eye on this. Yeah, David, that's probably what it currently shows. It just means it's not getting filled yet. Right? Price is up above it. It's not going to get filled if you're looking for something that has to be, at the money or in the money. It's not going to. I mean, that's why we put in pending orders. Yep. So pending orders good till canceled, Roger. So right now it's trading for about 12 cents, Dave. That's fine. I mean, if price test the 691 or test the 690, maybe goes a couple points lower, then we should get filled at the price we want, which is 50 cents. Okay. All right. So I'm going to keep an eye on just the day. I mean, right now, engineered options trades. We should be looking for, I mean, XSP. If you can close XSP for like 1 cent, you want the peace of mind just to let it go. I've got 47, 48 cents. I mean, I'm showing like a 2 cent debit right now. I mean, if you want to grab 48 and you're getting 96% of that credit today. Probability of profit right now based on current options chain is 99.5%. So I'm going to take that probability that we will stay out of the money on that. But I know for people that size up a little bit heavier, I mean, if you want to grab 96% of that credit, you can take that right now. So quick update. Um, quick trade update. 126 expiration trades. This is for engineered options. Okay. We're sitting at a 90. XSP sitting at 99.5% probability of profit. Okay, I'm keeping. Okay, I'm keeping the trade open. So far, price looking pretty good. We will see if the market's just gonna. And we've seen this a lot since last week too. It's like the market just goes up, early in the morning, and just don't be surprised to see a lot of these kind of break-even days where the market's up all morning, pulls back. Market's up for the morning, pulls back. Right? Market's up for the morning. Either we stall and pull back, or we look at that like plus 38, plus 39 point move. So right here, you take your open. Price is already up 25 points. Not too much further. We'll be hitting the market maker move for the day. So the question is, do we stay there? I mean, this is a good situation where we should stay above 69.25 for the remainder of the day, which is what we want. Okay, I'm just trying not to get beat up by if it is an open space to 7,000. I'm trying not to get beat up with this thing just drifting higher. The butterfly, which one, admin? Is that the bonus trade? That would be a 95-cent debit on that bonus trade. So I just updated this here. Let me go SPX. So I labeled this trade. So there's a broken wing butterfly for the $1.65. And then there's my defense at 95 cents. So I have the $1.65. This one should be there. So these are the two bonus trades. Bonus trade at the 55 pin. Bonus trade at the 40 pin. And the defense at the 7,000 pin. Okay. So, I mean, how do I manage these trades? I mean, it's going to be Friday. The idea is if prices up towards 7,000, then I want to be taking profit on this defense butterfly. If prices below 40 or below 55, I'll just let these broken wings give me the full profit. If we're hanging out around 40 to 45, there's actually bonus profit. There's traps in here on the broken wing butterflies because I did a 10 wide, so that potentially has like a up to $1,000 bonus trap in those two. So the defense trade is a debit. The defense trade is a debit. The other two are broken wing butterflies. Broken wings are credits because we have remember what a broken wing butterfly is? It's a debit spread that is slightly narrower than the credit spread. That's the combination, right? When you take a broken wing butterfly, you have the credit spread would be, let's say this is price at 69.47 right now. And then here's my I guess my top I'm calling around 69.65 or 69.70. So we have our credit. There's the debit for the profit trap. There's the other side of the backside of that bonus trap. I still have my credit. Then I get my break even, my risk. Right? So let's say this is my 69.30 trade. This is my pin price at 69.40. This is my break even at 69.66.65. And my full risk would be, let's see, 50. Shoot, I did that wrong. I was thinking of the wrong one. This would be 51. So 51.65. And then my full risk would be 69.55. Okay. So I have in blue, I pulled in $1.65. I have a profit trap of up to $10. And I have max risk of $3.35. Now, the broken wing butterfly is because this 40 to 55, my strikes are here. 30 and 40 is a 10 wide debit spread, right? That's a 10 wide debit spread. So my 63.30 is a buy call. One of my 69.40s is a sell call. So that's a 10 wide. I buy the 69.30, sell the 69.40. That's a bull call debit spread. The 69.40, the other sell call, all the way to this 55 is a 15 wide. This is a 15 wide. So the width of the credit spread can help finance the debit spread. Correct. Yep. So I'm trading the break even, Jacqueline. I'm not chasing this thing higher. Look, FOMC with earnings. I mean, if I'm dead wrong, I don't participate this week. But in my experience with FOMC, it's typically a very noisy, choppy week. So I don't mind getting filled on Wednesday for engineered options and just getting a trade that's break even or better at the break even level or better. Okay. So you sell the debit spread to take the trap profit. No, what you do is the entire profit trap works this way. So let's say that price is going to go. Let's say price is up to 7,000. Okay, this trade loses. Does this make sense? So if my trade, this is my broken wing butterfly 69.30, that's a buy call. 69.40, that's a sell call with two contracts. So this is a +1 for a buy. This is a -2 for sells. And this 69.65 is a +1 for a buy. And again, the easiest way for me to explain this and break it down is if I just take the trades individually, if I buy a 6930 call, and with that, I pair that with a 6940 call, this is a debit spread, right? And it's 10 wide. So if I also sell a 6940 call and I buy a 6955 call, this is a credit spread 15 wide. So another way to think about this is, okay, this is what Chris is doing. He's buying a 6930 call. He's selling a 6940 call. And he's selling another 6940 call. And he's buying a 6955 call for $1.65 credit. Right? But the way the broken wing structure is set up is this is where some traders get lost. Is like, wait, what's a 1-2-1? Well, it's because I have two contracts at the 6940. So the broken wing is a buy 6930 call with one contract, sell 6940 call with two contracts, and buy the 6955 call with one contract for $1.65 credit. So the trade starts out as this side of the trade right here. The bonus trap, the 6930 by 6940, that $10 bonus trap is because of this debit spread right here. And because of that bonus trap, if price is at 41, 42, 43, 44, 45, 46, 47, 48, 49, even 50, if price is at 69.50, I still have a bonus trap because I'm still at the $1.65. That's the end of my bonus trap. But if we're at 49, I get an extra $100. 48, extra $200. 47, 46, 45, all the way up to that $1,000. So ramping up to that pin price, and even on the other side of the pin price, I have a bonus profit. Okay. Now, when I'm doing the debit spread combined with the credit spread, this is what the broken wing structure is. So the 30 and 40 is a debit spread, and the 40 and 50 is a credit spread. So when you put it together with a broker platform, if you're doing butterflies, the broker's looking for a 1-2-1 combination. And I typically, broken wings, I'm always looking for credit. So and you can build broken wings in a way that you pay a debit You can pay small debits for these and still have a profit trap. But ideally, I like to use broken wings to kind of call my top or bottom and get that credit up front. Okay. Sean, I got filled at 95 cents. What are you talking about there? I got filled at 95 on my defense trade. All right. Sorry. All right. Does that make sense? So broken wing butterfly, you are calling a top. In my world, a broken wing butterfly, I'm calling the top. I'm either calling the top like this or I'm calling the bottom. That's what I use a broken wing butterfly for. What I do with the broken wing butterflies is it gives me a trap. It gives me a profit trap that helps me. So rather than just taking a credit spread and it's kind of all or nothing, at least for this profit trap, it gives me about a 10 to 20 point buffer in this setup. So rather than calling the top at 69.40, technically my break even price is 69.51. So I have 11 points of extra wiggle room versus just calling. It's if I did a 69.40 by 45, it's all or nothing. If price is beyond 69.45, I don't make any money. But I give myself an $11, almost a $12 buffer here. I can still lose, but point is, it just helps me kind of buffer that risk. My question is that you sell it for 165. Okay. So, yep, here's how it works. With broken wing butterflies, okay, you can enter for credit and you can also close or exit for credit with profit trap. Okay. So in an ideal world, let's say that this trade, and again, you got to kind of be hypothetical here, but let's say by Friday, let's say that 1:30, so Friday, SPX is trading at 6,945. Okay. So if we came into this trade Friday, that's the final day of expiration, you're going to start to see that you might have some bonus profit here in the middle. 45, if you're following my mouse here, 45 is about here, right? Now, it may not be offering full profit trap because that's going to be literally the day of expiration at the close. So the perfect profit trap is all the way up here at 69.40 at 4 p.m., the close on the expiration day. So if we're going to get out of this trade for profit and get out of this trade for bonus profit, it could be during the day of expiration. You have your, $1.65 here. Maybe it's offering a bit of a bonus profit throughout the day. As the day goes on, this bonus profit gets larger. As it gets closer and closer to expiration, gets larger. And in the final 30 minutes of the day, this bonus profit trap is matching the risk graph. So all the magic in butterfly spreads, and that's whether you do a standard butterfly that has risk on one side or the other, or you do a broken wing butterfly, a broken wing this way, or a broken wing this way, all of the magical profit trap happens near expiration within the final 30 minutes. Okay. And its peak profit is at close. Right. So everyone, not everyone, I don't want to assume, but a lot of traders, when they first take this trade, they're like, well, Chris, it's at 69.40. Shouldn't we have profit? Well, if it's days before expiration, no. If it's days before expiration, you're not going to have that full profit trap. You might have a little bit of a bump, right? You might have a little bit of a profit trap, but not much. It's at the end of the day, at expiration, when this profit trap is going to be fully realized. Okay. So anytime I take a trade like this, remember, a broken wing butterfly, to me, I'm still calling the top. So I want price. The easy trade for me to win this thing, the easy trade is, and this is getting really sloppy here, but the easy trade for me would be if I have the buy 6930 call, sell 6940 call, and buy the 6955 call. Okay, for $1.65 credit. If SPX is less than 6930 by expiration, keep the full 165 credit, right? If SPX is 6931 to 6949, that is bonus profit area. Again, this is at expiration. If SPX is greater than 6955, I'll put here by expiration. That is full risk, which is you take your $15 wide minus your $10 profit trap minus your $1.65 credit. So my full risk would be $3.35. So in this trade, I can make $1.65 if price is below 69.30. I can make up to $1,165 if I'm in between 69.31 and 49. It's got to be spot on at 40, right? The $10 pin price is 6940, which is very difficult to do, right? 6940 at expiration is really, really difficult to do. But even if it's within, 5 points, 6 points, 3 points, 2 points, I mean, anywhere close to it, you're getting a big fat profit trap near expiration. And obviously, if it blows through my entire, I'm calling the top. If it blows through that level and we're beyond that, it's still defined risk, which is why I take these trades. It's like, if I'm wrong, okay, I'm wrong, but it's defined risk and I'm only down a couple $100. Okay. So when you look at a graph now, does it make sense? There's my credit. There's my profit trap. There's the other side of my profit trap. There is my break-even point. And then there's my risk. So there's my credit. So if price is lower, there's no risk on this trade. If price falls to 6,900, there's no risk on the trade because I'll just keep the full $1.65. Where the risk is if price is beyond 69.55, then I have my full $3.35 risk. If price is even hanging around somewhere close to 69.40, at the end of the day, in the final 30 minutes of trading, 20 minutes of trading, 15 minutes of trading, you're going to see some bonus profit here. So here's an example. I'll give you just a couple scenarios. Okay. And this is the 69.30. This is where the profit trap starts to ramp up. Okay. So just to make sure everyone's understanding this. So if on 1:30, this would be the day of expiration. Okay. Let's say SPX is at 6,900. Okay. Let's say we're reviewing at 3:30 p.m. Eastern time. So we're in the final 30 minutes of trading here. SPX is at 6,900. What's the likely profit here? So fast forward, we're talking together on Friday, 3:30 p.m. Eastern time. SPX is trading at 6,900. What's the trade? Okay. Our trade can expire for 0. And we keep the full $1.65. Okay. Let's say SPX is at 7,000. Our trade can expire for, well, technically it'd be $15 because that's the credit spread side, but less the 10 and less the $1.65. So the max loss is $3.35. Okay, but this is where it gets interesting, where you're trying to manage this trade in the final bits of expiration. SPX is 69.38. Okay, our trade is likely showing $1 to $2 bonus profit. Okay, so if we still have 30 minutes to trade, it's not going to be the full profit trap yet. Even if it's really close, if it's at 38, 39, 40, 41, 42, 43, if it's in the profit trap, that's great. We want it to be there. But the optimum profit is at close, at expiration, sitting exactly at our sell strike, which is the 69.40. That's the only way we're going to make $1,000 on that trade is if we're pinned at 69.40. So notice how that's a lot of perfection for us to get that trade. So it's usually not the case. But if we're at 69.38 and we still have 30 minutes to go, this trade for offering up $1,000 in profit, this could easily offer a couple $100 of profit. So we could close, let's say we can close for $2 credit. Well, that would be $1.65 credit on entry and $2 credit on close. That's a net profit of $3.65. So even before expiration, you can still get out of the trade for profit. And this is where traders are like, wait, that doesn't make any sense. Yes, it is true. You can open for a credit and you can also close for a credit because that would be the bonus trap. That'd be the bonus profit. Does that make sense? Okay. Blows my mind. Sure. And you know, I know it's a little different because you're typically used to I open a trade for a credit and then I close it for a lesser debit, or I open a trade for a debit and I close it for a higher credit. That's how we make money. But in this profit trap scenario, if I open this trade for a credit because I'm using the wider credit spread to finance my narrower debit spread, I love these trades when I can open them for a credit and then also close them for a credit because that is a bonus profit. Okay. But again, as I said, the magic happens with the bonus profits at expiration. You know, and if anybody's traded me in these live sessions, we have some of these trades that run in daily profit all the way to the end of the day. Some of us trade these double up, my double up alert service, where we're taking a lot of these pin prices and butterfly spreads. A lot of the magic is happening near the end of the day. Do I always have to hold these trades at the end of the day? No, I don't. But for this particular setup, if I want to have any chance of a bonus profit, then I'll probably manage the trade on Friday afternoon. Okay. All right. All right. Let's get a little wire yes in the chat if this makes sense. You know, again, if this is like I'll never trade a broken wing butterfly. Well, I doubt it because I think you should. I think they're great trades. To me, if I were to compare the difference between a broken wing butterfly and a credit spread, okay, let me build one out and show you. Let's go option strat. Okay, let's build out let's go long call butterfly SPX. We'll use the exact same trade. So we'll go January 30th. And I have the 69.30 by 40 by 55. There. Okay. And what is annoying is right now the trade's offering 250. I could literally be risking 250 to make 250 plus have $1,000 profit trap. But that's okay. It's because the trade is within, 4 days of expiration. So I get it. Anyway, I just want you to see the difference if I take this out a little bit like so. Okay. Having a broken wing butterfly, because of this profit trap, it gives me a little bit of a cushion before I take on full risk. Okay. If I compare this, let's say I use the same strikes. Let's say that I'm doing a pin price here. So the price I was looking at was 69.40. Okay. Based on my rising wedge, my technicals say that 6940 is a, gap fill, then price can fall from here. Okay, that's why it shows 6940. Now, could I see price poking, 6990, 7,000, and then falling from there? Sure, maybe. But I chose 6940 for a reason, right? Now, if I do a broken wing where I go 6930, so this would be a sell, right? And I buy the 6940. And I buy the 69.55. So I have a 10 wide debit spread, a 15 wide credit spread. That's how I got the $1.65 credit. If I do a sell 69.40 call, versus just a buy 69.45 call. Let's say that on this trade I can get, $2.50 credit. Okay. I just want to compare the break even. So this one offers a $10 profit trap. My break even price is 6951.65. This one, it's all or nothing, right? I'm either going to get 250 credit or I'm not. And my break even price is 6942.50. That's why I'm saying like broken wing butterflies are great. I still like the idea of kind of calling the top, but I give myself a profit trap and my break even is significantly higher than just doing a credit spread at the same pin price. So if I ever believe or feel that I'm going to have a topping opportunity or a bottoming opportunity, I tend to favor the broken wing structure because of that profit trap, and it increases my margin for error in a good way, right? Like I can now have 9 extra points of room for error before I'm taking on any risk. That makes sense? So just so we know the difference. So if I leave this text up here, then I drop this one. So I'll go 69.40 by 45. 40 by 45. So I'm going to sell the 40, buy the 45, get rid of this one. And then we'll get rid of this quantity there. Okay. Now, right now, this is showing that because we're trading this one slightly in the money, it's giving you like $3 credit. But if I just took it initially, I got 250 or risk 250, there's my break even. With the broken wing, there's my break even. So anyway, for me, the summary is I like having a bit more room for error. So my break even is a higher price in the case that I'm calling the top. And also if I'm, I'll just say lucky. If I'm lucky, maybe by Friday's expiration, I can close this thing for a, bit of a profit trap, which doesn't suck either. I get in for $1.65. I close it for $2 credit, $3 credit, $1.50 credit. That's extra profit, And if we're super lucky and we're also, bold enough to hold this thing to expiration, then we see where that profit trap fills up at the very end of the day. And maybe it can be like a $700, $800, $900 winner. So either way, it's just a trade. At the end of the day, it's just a trade. And I could be wrong, but having a broken wing gives me a profit trap, which is going to make me, a little bit more money if I'm kind of spot on with the trade result in the analysis. Okay, so, and same things there. So Randy's, I don't need to go through the exact same thing on the 69, 45, 55, and 70 because it's going to work in a similar way. So if you buy the 45 and then you sell the 55, so I'll make this one 2 contracts. Okay, so 45, 55, and then add in the 65 or 70, I'm sorry, because it'd be 10 wide and 15 wide. So here's the broken wing butterfly. Right? So now my break-even price, if I'm pinning this thing at 55, my break-even price is, I got filled in this one for, this trade got filled for $1.95. Right? So I'll do this one more example. So we'll go buy 6945 call, sell 6955 call, and then buy the 6970 call for $1.95 credit. So my break-even price is 6.95 because I'd have the 55 plus 10 because I'd have the full profit trap here plus my $1.95. So 69.55. If I add this up here, so 69.55 plus, I guess 10 plus $1.95. 6966.95. So that's my break even. So on this trade, if SPX is less than 6945, we keep $1.95 profit, which is the initial credit on the trade. If SPX is greater than 6970, full loss, and it'd be $3.05. If SPX is 6946 to 6954, that's $1 into the profit trap and $1 before the end of the profit trap. That is a $1 to $10 profit trap that we won't really know until we get closer to expiration. Okay. So if price is trading in between, let's say 69.49, 69.50, 69.53, 69.50 on the nose, that's profit trap zone. And in those final kind of 30 minutes of the day to expiration, in the final 20 minutes, final 15 minutes, if this trade is offering, $1 credit, $1.50 credit, $2 credit, great, close it, because that'd be a bonus trap and a winner. And if you want to get, $1,000 out of the trade, you got to hope that thing is going to be right around 55 by expiration. So one thing that could be interesting is if price is around like 69.50 by expiration, this would be a $500 bonus trap in addition to the credit. So we could have, close this thing for like $5 credit and get the $1.95 on top of that. You turn this into a $700 winner. Okay. So a lot of times, look, this trade, I don't like to break these trades up. So a lot of people ask this, how do you manage that trade? If it is on for a credit, then typically if I want to close it to exit, okay, so the $1.95 credit closing at a lesser debit equals profit, okay, or a $1.95 credit closing at any credit equals bonus profit. But don't break the trade up. Don't try to close like, well, I'll just close the 45 and the 55. No, close the whole trade. Don't break the trade up. If it's on as a butterfly spread, close it as a butterfly spread. So if I'm entered at a $1.95 credit and I close it for 95 cents debit, then I'm making I'm making a dollar profit. If the day of expiration comes and I'm at a $1.95 credit and this thing is showing 50 cents credit, a dollar credit, a $1.50 credit, you can close it for a credit, and that's a bonus profit. That's because it's inside that profit trap, giving us some of that bonus credit. Okay. So look, I will be here all week. Obviously, I'm going to be, walking you through this trade and how I'm managing this. The goal is, if we have some profit traps in the broken wing butterflies, great. If price is just hanging out at 7,000, well, that's why I put on defense trade today. That makes sense? Okay. All right. I think we can put a pin in this broken wing butterfly discussion for another day. Everything looking pretty clean for engineered options, looking like we're gonna have a full winner. Unfortunately, price is running up for now, so we're not getting filled right away. That's okay. I'm honestly okay with it. And the reason why is because we still have a lot of crap to get through this week. FOMC, potentially government shutdown by the end of the week, earnings. I would suspect there to be some pretty heavy volatility. So, and if I'm wrong and the market's way above 7,000 by the end of the week, then I don't have a trade. I didn't participate, and therefore I didn't get rewarded for it, and that's okay. But again, like right now, until I'm a little bit more convinced that the market is in like a nice alignment for momentum, I'm going to play a lot of these kind of break even levels. Okay. All right. So what I'd like to do now, so pending order still on, let me go to where's my pending here? So pending order, the daily profit is only trading for like 20 cents. I think it was up to like 60 or 70 cents when I first put it on this morning, which I wasn't going to take the trade for that. Like going 10 wide for 60 cents is not really good reward to risk. So I'm just going to let it hang out. But at least on the engineered option side, this is a much easier trade just to get a nice winner, which is good. And also too, it's like if we're sitting here with engineered options, I don't know why my head's like so slippery today. My headphones keep falling off. Our engineered options, we have 2 monthly trades running as well. So for engineered options, we have 2 monthly positions that are out to the 130 expiration, and we have a trade today. So we could have 3 for 3 by the end of the week for all 100% winners. you know, and that's fine. So I don't need to force a trade. It's like, I think there's going to be a lot of volatility and indecision this week. I'm putting my levels in. They're good till canceled. That is the plan. But if the trades we have open, we get three winners for three winners, three money doubling opportunities. That's great. And we'll keep participating. Linda says, I'm trying to purchase 39, the 69, 30, 45, 55 markets offering 380 credit. So Linda, understand that trade. If you take the trade for 380 credit, okay, remember, you're also taking the thing in the money. So if you went to do this trade now, if you did let me use a different account here so I can do this from scratch. So if you did the 69.30, this would be the call side. So I buy the 30, sell the 40, and buy the 55. So right there, that shows my broken wing butterfly structure. I buy, I sell two, and I buy one. So buy one, sell two, buy one. That's the broken wing structure. The broker says right now this trade fills for about 275 credit. If I take this trade now, then I'm risking, let's say I get filled at 275, I'm risking 225 max risk. But what does price have to do? Right now, the reason you're getting more credit on the trade is because, well, there's still upside expected move, and the probability of profit right now, I mean, we're at the higher end of the trade. So everything you are doing in this trade is in the money, and you want this trade to be out of the money. So you want price to be down here, right? You want price to be 30 or lower for you to achieve that full 275 credit. But right now, if you took the trade, your max risk is 225. So, I mean, what's the trade-off? Well, you're getting more credit. You get 275 to take the trade, but your probability of profit is much lower because we're now trading at 55 on the outer edge of your broken wing butterfly. We're trading out here. That's the trade-off. That's why the broker says you can have more premium on this trade, because you're taking a bit more risk, realizing that your probability is slightly lower. But risk reward wise, it's a great trade. It's just, is this the probability trade? Okay. All right. Roy, if you're new to engineered options, it's inside the Telegram for members. Engineered options has its own member Telegram. No. Look, if you didn't get the bonus trade, I wouldn't take the trade right now. Yes, it's offering good premium, good credit, but if the market keeps drifting higher, all you're doing is taking on risk. So what you have to be comfortable doing on the trade is, if you take this trade at 275 credit, you have to be comfortable with about a 52% chance that the market's going to be above your strikes and you're going to lose 225. That's it. Like, if you are comfortable embracing that smaller risk, then it's a good trade. It still offers a profit trap. But what do you need price to do? You need price to get back below 69.30 to win your credit side. You need price to stay around 35 or 40 or 45 for profit trap. Okay. So if I have to explain, everything about this, like, if you didn't take the trade with me last week, I wouldn't force the trade right now, because what did I just do on the trades? I'm in the trade. I recognize that it might be in some trouble. Therefore, I put in a defense trade here. So from 85 to 70.15, I put in a regular butterfly that is a 95-cent debit. And that's defense, because the price keeps going higher, I need to defend the risk that I have on that broken wing butterfly if it's not going to work. So I wouldn't force the trade. You can just jump in with another bonus trade with me or something later, but don't force a trade if the mechanics aren't quite clear. Okay. So to Linda's point there, do not set the trade at $1.65, because if you like the trade, then take it for 275 and get more credit, take on less risk, but your probability of profit is less. Because when I took this trade, remember, I took this trade and price was around 60, 68, 80, 68, 90. So I took this trade where I thought I had some wiggle room. Well, now we're up through my strikes. So I'm taking on a little extra risk now. But if price is choppy and volatile from here, then maybe this is about where we kind of finish up the week. So opening price around 69. I don't know. We'll see. I'll make an assumption here. Let's say the market for the week finishes at a break-even price. If the market's break even for the week, guess what? I will win on that broken butterfly. But what does it require price to do? Price has to fall. If price goes up to 7,000 and then rejects it, well, it's all about where it settles. I need price to be less than 69.30. I need price to be less than 69.45 for my broken wing butterfly tail credit. Or if it's equal to 69.40 or it's equal to 69.55, that's profit trap material. So I have a couple ways to manage the trade coming into expiration on Friday. Okay. All right. Let me do this. The day isn't done. We'll see what happens with daily profit play. I do want to get through a session here on daily profit play. So we'll hammer through this. A lot of you that have joined me for engineered options are coming in every single day. We're getting some nuggets of education experience. I never mind sharing strategies and trying to open your horizons up to more ways to trade the market. Right? I mean, literally, if you want to trade the market up, down, sideways, options, to me, it's a calculated bet. You can do it a variety of ways. It doesn't have to be perfect, but there's always, what's really cool about trading options is there's always a trade-off. If you want high probability of profit, you're typically going to get way more risk for less reward if you want the highest probability of profit. Okay. Some of the profit trap stuff that I do, like butterfly spreads and broken wing butterflies and having like asymmetrical option trades, I mean, I'll sprinkle those in. All right. But this is my number one day trade strategy for 2026. This is pretty much exclusive zero DTE. It's daily profit play. This helped us win 362 day trades in 2025. We would have had another chunk. Right now, we are sitting on, we have 493 winning trades in daily profit play. 493 trades that have they've been winning, and that's 89.3% accuracy. We do the math on this trade. We need about an 81% probability, or I'm sorry, 81% is our kind of break-even price. So at 89.3, we're carving out an edge that when we're trading, this many reps, we make a lot of money. So the model portfolio has seen a net profit of about $80,000. And, the gains have been up to about $109,000 and the losses at $27,000, $28,000. So net profit around 80K over a total of about 540 trades or so. Okay. All right. So quick reminder, we're developing tools and strategies to the best of our ability. No one can guarantee the future. Certainly, there's no crystal ball in trading. There's always risk. But we're talking, live trading published alerts since August of 2024 all the way to present. Win rate's been over 89%. We're at 89.3 and the average return of 14.3% and a one-day hold time, meaning we just take the trade for the day and hold it for the day. It's a 0-day expiration. Okay. There will be losing trades. Look, even though I win, almost 90%, I still don't win all of them. So, daily profit play is, and anyone that's in my daily profit play segments, by the way, or in my class, in my master classes, how specific and how refined have we become over the last year and a half of this service? Pretty refined. I mean, we've spent a lot of time together. I would say we probably had 10 plus master classes in the last year, and we just keep getting it better and more refined. And I'm not saying refined to cherry pick and optimize. I'm saying we are making good decisions to address, let's increase our probability of profit. Let's not accept more risk. Let's set our trades where we know exactly what our reward and risk is. Okay. So to me, this is probably the most it's the most